Hello students, good afternoon. Welcome back to this video. Today I'm going to make a lecture on Fundamental Accounting 1. So this is what you see from the slide this introduction to accounting and the business. What is listed on the here on the slide is chapter objective. So after studying the chapter, students should be able to describing the nature of the business and the role of accounting. Since you are accountant, so you have to identify, you have to analyze, you have to determine your role as accountant and ethics, what is expected from individual in a business outside of the business. So this is a moral standard what expected from an individual or collective or doesn't matter. But we have to act according to the principles and according to the guide of that organization. That is ethics in business. We are going to see in the next slide. And the second point is summarizing the development of accounting principles and related them to practice since from the early development of accounting theory up to this practice. We are going to analyzing this issue in the next slide and stating accounting equation. What is accounting equation? How these accounting equations are related and the elements that existed in this accounting equation, like accounting equation simply asset equal to liability plus owner's equity, but there are an element in a statement of financial position. So we are going to see in a clear way in the next slide. And another point is describing and illustrating how business transaction can be recorded, what is business transaction itself, and how this business transaction can be recorded. Business transaction is simply it is an occurrence of events that increasing or decreasing this element of financial position. So die to the transaction, die to purchase, die to sales. This statement of the element of financial policy position can be affected. So we are going to see this concept in the next in this chapter, fundamental accounting. And the last point is describing financial statement for individual business or sole proprietorship and explain how they are related. So let's begin by defining the business itself. What is business? So business in general, it is an organization in which a basic resource like the input such as material levels are assembled and processed to provide and good in the service, providing good in the service, and then our customers are purchasing this final good and satisfy their need. So this is a business. So the main objective of doing a business is just maximizing. This very clear, maximizing a profit. So without profit, those business is nothing. So this is the definition that given for a business. So there is a classifications of a business based on formation and function. We can classify a business based on their function as well as based on formation. So based on function, there are what you see from the slide, 3 business or 4 maybe sometimes exist. Service business, merchandising business, manufacturing business. These 3 business classification is based on their function. Based on formation, we are going to see in the next slide. Let's see what is service business. Let's begin by having some basic concept about service business. Service business is the one that provide intangible, not a tangible product, not physically something that physically exists, but actually they providing intangible service for the community, for the one who need. So an example, what you see from the slide is an example of service business like airline, transportation service, entertainment service like drama, music, and so on and so forth. This is service business, an example of service business. What make different from another business is service business provide intangible product for the customer. Uh, the second one is merchandising business. In broadly speaking, it refers to any entity that engaged in selling a product. So this product is finished product. Under this definition, there are two types of merchandising company, namely like retailers, wholesalers. Retailers sells their product directly to the consumer, but retailers themselves purchasing in bulky product from the wholesaler, then they directly contact with the final consumer. So sometimes people are worried about this price increasing, the price of good and service in the market. This may be happen. One factor is just a long chain between these individual who are actually engaged in as wholesaler or retailers. Why? Because wholesaler directly contacting with manufacturer, and they purchasing the product by some set price, and then they are selling to the retailers. Retailers are the value of this, are the price of this product, and the selling to this consumer. So this long chain can boosting the price, increasing the price of a product. So what you see from the slide is some basic, some example of merchandising business, like Abdullahi or Rahim General Trading Company, Addis Fana General Merchandising, Ado International PLC Merchandising, Aman Bakari. Bakari means that producing something to hear, like bread or something. So this is an example of merchandising business. The other one is manufacturing business. This manufacturing business is different from the two. Why? Because this manufacturing business is any business that use a component or part, raw material that will make finished product. Have you seen they are dealing with raw material? They have to purchase the raw material and then bring to the station, bring to the center, and converting this raw material to an output by adding levers, employing the levers into production, and then they processing this raw material, and then finally they have an output that is a final product. So they engage in production process. When we say production process, from the purchase of raw material up to the final end, up to it can be sold. So this is what you see a basic example from the slide, manufacturing business. So like for example, food and beverage product industry, textile and apparel product industry, laser and laser product industry, wood, paper product industry, chemical and different kinds of which manufacturing different kinds of chemical, producing rubbers, plastic product, and laser, shoe, and any other types of product what we wear this clothes. So this is an example of such types of business, that is manufacturing business. They engaged actually in converting the purchasing raw material and converting this raw material into the final product. Another point, important point that attracts many accountant is just how what is the role of accounting in business. It is very clear. Everybody understands that the role of accounting. Accounting can play a significant role in different business, in helping like recording transaction, classifying economic activity, summarizing all the activities that are undertaken in business or non-business organization. So accounting, from if we simply go to the definition of accounting is an art. It is a science of recording, classify, summarizing significant matter in terms of money transaction and the event in which financial characters and which has financial character, and interpreting the result then. So this definition is according to international American Institute of Certified Public Accountant, but under this there is some relationship in definition under International Financial Reporting Standard. Also, this is what is expected from us is what is the role of accounting in business. it is very difficult to calculating the company profit, the company loss, unless the company recording all the economic activity, all the transaction or activity, all the activity undertaken in that business organization. And then if activities are recorded, if the process are undertaken, and then they should have to prepare the statement, the four statement, the statement of income, profit or loss, statement of financial position, change in owner's equity, and any other like cash flow statement. So this statement can be prepared by accountant. So accountant can play a significant role, which cannot see indispensably or separately from each other. So they can play very great role. So the process by which accounting provide information to the user is they can follow this principle. The first thing is identifying the user, who is the user of financial accounting, who is the user of this document, the company information. So the first thing is identifying the user, and the second point is assessing the user of informational need. They need an information, actually, we know that, but we have to assess the way we can provide and satisfying our need. That is another thing. And the third point is designing accounting information. Why we do the accounting information to meet user need. As we know, nowadays we are not just just looking the traditional way. Or so some company are using different technologies, just regarding this computerization. In short, computer can play a significant role there. So we have to design the way we reach our customer, the way we meet our customer, or the one who need, or the one who has an interest on the company. So we have to design accounting information. We have to design accounting system to meet our user. Another point is regarding economic data about the business activity or events. Regarding is very important. As I have said before, without recording, it is nothing to know about the company profit, the company loss. So the company activity or any event that happen in business organization must be recorded or documented. So, and then preparing accounting report for the user. So this report is the final stage or the final process of accounting information. And then we prepare the statement, the four statement, and then we provide then our user of financial accounting need that data for various purpose because of their interest on the company. So this is the final stage. So we have two fundamental user of financial accounting, that is financial accounting information, that is internal or external statement in general. Who use accounting information? That is, to answer this, there is internal and external user of financial accounting, financial information. The internal user is, for example, manager of an organization, employee. They use the accounting information for decision making, for planning the future company goal, objectives, and so on and so forth. So managers and employees are internal user of accounting information. They need an accounting information for different purpose. This purpose may be different from the external user. Why? Because manager is the one who rules and the one who leading an organization. So they need for planning purpose, and they need for decision, and then controlling issue. And the second point is external user of financial account, the one who use externally. They do have an interest on the company, so they need accounting information like customer, creditors, investor, government need financial statement of the company for different, for tax purpose, and creditors, whether to give a credit for the company or not to give, to decide such they need the accounting information. Why? Because credit defaulters are the main problem in our today market. Sometimes without analyzing the capacity or the solvency of that the liquidity of the company, the solvency of the company, it is very difficult to provide or facilitate credit process for this for different business. So this is external user. External user do have their own interest on the company, so the company has to present prepare the financial statement, the right financial statement, the objective financial statement, the quality, the best quality financial statement, and then present to them and satisfy the user of this external user of accounting information. So this is a different discipline of accounting, managerial accounting. It is an area of accounting that provides internal user with information. It's called managerial accounting. And the objective of managerial accounting is to provide both relevant and time information for manager employee for decision making as they need. So information is not equally. I have said many times that informations are not equally important. So some information are irrelevant, some are relevant. So based on the relevancy, so we have to provide the relevant and the timely information. Why? Because information is irrelevant as time passes. So it is nothing will affect, nothing will impact on the company future. So information has to be relevant and time. So we have to present. So managerial accounting it deals with internal user. So this information they play with providing an information with internal user. So the second discipline is financial accounting. Financial accounting is the same with another, but what make different is it providing an external user with information when they need. So the objective of financial accounting is to providing relevant and timely information for decision making need of to meet the need of our external user. So another point that listed under chapter objective, it is an ethics or the role of accountant and the ethics in business. Ethics is the moral principle that guide behavior of individual. So ethics is the moral value that is expected from anybody, not from a manager, not from somebody that working there, but in general, in collective, what is expected, that discipline that expected from individual to act according to the principle, according to the rules, according to the principle of that organization. So it is a moral principle by which people conduct themselves personally, socially, not personally, socially in the community, and professionally. We expect something from the one working with an organization or working in different place. So these all things are related to ethics. Like for example, as you see from the slide, you don't cheat on test as a student. This is the best example. As a student, you are not allowed to cheat on exam. If you break this principle or this instruction, it is a kind of immoral. So as accountant, as individual, we have to act, we have to follow the company principle, we have to follow the ethics that we have developed it as organization or as a society. Another point is the comparison of this accounting principle and general accepted accounting principle, international financial reporting. To say something about this, this generally accepted accounting principle is an old principle that developed in America by different people actually involved to develop this accounting principle. So still the last year, including our country, are following this principle. But nowadays, There are many countries in the world. More than 160 countries are following, just decide to follow, uh, decided to follow international financial reporting standard. I think the objective of just developing this new standard is to have the common language throughout the world, rather than using the principles that develop it in some country, or using by the limited environment. So it is better to follow that internationally accepted accounting principle, that is universal ways, and universal in order to have a universal understanding about the accounting process throughout the world. This is in detail we are going to see in the next slide. And also I will make some video specifically on this topic: international financial reporting and the general accepted accounting principle. What is the relationship? What make different from each other? So I will provide an information that on these topics separately. There is a concept, some concept in accounting, like business entity concept, cost concept, unit measurement concept. So what is business entity concept? Let's see this concept. Business entity concept, the activity according to the business entity concept, it says an activity of business are kept separate from the activity of the owners or creditors or any other business. The concept of this is let Mr. X operated some business, and also that Mr. X do have his own assets, for example. So according to this concept, business entity concept, that Mr. X should have to regarding his company asset in separate or distinct ways from the personal asset. So this is the case in this concept. So based on this, we do have some business. As I have said at the entrance of this video, business are classified based on function, based on formation, based on information. Formation, we do have four major business, like sole business, partnership, corporation, and the cooperative. So under this business entity concept, we are going to see separately each business, each concept about this business. The first one is proprietorship or sole business, or this sole business is individual entrepreneurs, the business that owned and operated by individual person. So the person who work exclusively for himself, and he alone bring the capital and the skills, and is solely responsible for the company result or the company profit. Not only this, if the company fail to operate or fail to generate some revenue, that individual person takes the risk of that business. Because of that, we say that entrepreneurship, when we are studying entrepreneurship, is the one who take and accepting the risk. How much the risk, how much the size of that risk, it is limited to the amount invested that as a capital. So this is sole business. Sole business is individual business. The one who run business individually, we call it is individual entrepreneurship. So what is now here is what is important thing is analyzing the advantages and the disadvantage of having different types of business. What I have said before. Either it's a partnership, either corporation or sole business. What is the advantage of operating either of this business? Let's see the advantage of having this sole business. Advantage is the first advantage is just it is very easy and the least expensive form of ownership to organize. Why? Because if you decide to operate sole business, it is not much expensive. It is not it might need some legal requirements, so it is not expected to go some meet some organization who are giving license or something. So there is no such much bureaucracies when you decide to establish these types of business. So it is very easy and less expensive, and also it's subject to new few government regulations. There is no much government interference in these types of business, since the establishment of this business need small capital and individual. And another point is it is subject to lower income tax. Why? Because the income tax is always imposed based on the size of that business, the size of revenue that the company generate. Since this business is small, and the amount that the expected profit also not sizable, and therefore it's subject to lower income. Another point is the owner receive all types of profit. So profit is not shared. Why? Because who share the profit from this individual? Why? Because individually provide the capital. So all the profit that that individual obtain during the operation is just to go to the individual pocket. So this is an issue. So the disadvantage of having this business is unlimited liability. So liability is not limited to the amount that invested in capital. So this is another issue. And the second point under business entity concept is partnership. Partnership is based on formation, one type of business. Partnership is a legal arrangement between two or more people who decide to do a business together. Relatively, it is easy and inexpensive to set up when we compare to corporation, for example. Corporation is more strong, more expensive when compared with this types of business. So based on the agreement, friends and the people are come together and join together. If they do have a common objective, if they do have common understanding, they can operate a business. Such types of business is called partnership. So what is the advantage of having or forming such business? It is easy to establish partnership agreement. Why? Because who decide and who interested to do are doing such kinds of a business. And the second point is separate legal status to give liability protection, since they agreed and agreed and decide to operate a different business. So they do have legal status, and the profit are taxed only once. So there is no double taxation like corporation. So here is this is an advantage for such business. And the partners are jointly and individually liable for the action of any other. If one of the partner fail to pay his debt, so they are responsible, since the agreement is joint agreement, joint consensus among different individuals who actually decide the business. So that is an issue. And the other point is corporation. Corporation is a unique entity, separate from the owners and distinct types of a business, and it needs a legal requirement from just they need to have some license and field the article of corporation to start such kinds of business. It is not an easy actually to start this kinds of business like partnership and the sole business. So here in under the case of corporation, it's very strong, and it needs huge capital and huge resource to start the business. So what make different here is there is a limited liability. So limited liability indicate that the amount of liability is limited. The amount of investment is not beyond go to the individual asset or something. So it's limited to the investor capital. In this case, transfer of ownership is very easy. Why? Because shareholders can sell their share to anybody who are interested to join the business. So it is not much more restrict to such issue. Capital is easier to raise through sale of stock. So if they need additional capital, they can sell and they can issue a share or the stock, and they can sell, and they can easily mobilizing the resource in this case. So the same with in this concept, it is the same with partnership. Why? Because partnership also they can easily raise large capital. Why? Because two people is better than individual, three people is better than two, four people is greater than three. So they can, if people are people are joining together, they can, if they coming together, they can solve any problem easily. It is understandable. So here under corporation, one of the disadvantage of forming such kinds of business is double taxation. Once at the business level, when again the second times when they are the dividing dividend or something, again that amount is exposed for taxation. So this is business based on formation classification of a business. I think it is better to stop here. Next time I will begin from this up to that. Thank you very much for you are watching this video. Thank you. Thank you very much.